Okay, so I know that some of you out there who read the title of this video and clicked on this video to watch this video are probably looking at me and going, what in the world do you mean that you can lose money and make money, or make money by losing money? It doesn't make any sense. I told you all these YouTube guys don't know what they're talking about. But that's actually not true. There is a way. Well, it might be true that some of us YouTubers don't know what we're talking about, but it might be true that by losing money, in this particular case, in a stock market or a stock that you have on Cash App or Robinhood or whatever, that you can take a stock that you're losing money on that has decreased since you bought it and actually be able to make a little bit of money with that. And I'll tell you about that in this video today. Before we get into that, I want to remind you guys that this being YouTube, again, that you can help out the channel by hitting that like button. Hitting that like button, the subscribe button, the notification bell, or all three if you feel so inclined, will help out the YouTube algorithm. Let other people know who want to know how they can take losses on the stock market and make some money back on them. They can find this video. So I definitely appreciate it. And now let's get into what this crazy idea is that I'm talking about. Welcome to Wrestling with Finance. This is the YouTube channel for people who have wrestled with finance in the past and want to do better in the future. And again, we're talking about how to take tax losses and make some profit off of it. Now, this actually isn't a new strategy. It's been around for a very long time. It's something a lot of people who are savvier investors do, especially long-term investors. And that's what I do on this channel. This is about investing and not trading. Day trading is a different thing. This probably will apply to a lot of you who have been following this channel or other channels like it, and you're a holder. You're going to invest in something like a Tesla or some sort of VOO, whatever it is, and you're doing it for the long haul. You're not doing it as a short term or day trading or anything. And the method that I'm going to talk about here is called tax loss harvesting. Oh God, another one of these investment terms that what is this investment term you're talking about here? I know they get kind of excessive. There are almost more terms than there are pronouns in the world today. But tax loss harvesting is a term basically to describe the process of harvesting the losses that you have in the stock market and getting a bit of a tax return for it. So you may be asking, well, how does somebody actually do that? Well, it's actually fairly simple. And since we are near the end of the year, this is the best time to talk about it. So let's say you were one of the people who invested in Coinbase, for example. It's just a random example, but say you invested in Coinbase and you got into Coinbase and you put a bunch of money in, and over the year, Coinbase has just dropped and gone down, and you've lost some money on it. It's not anywhere near what you bought it at originally. You've lost 25% on it, right? Well, what you can do is before the end of the year, you can sell, or the end of the taxable year, by the way, you can sell your shares of Coinbase for a loss. Well, why would I do that? You said this is long-term investing. Why would I sell it for a loss? Well, here's the reason why. You can sell it for a loss, and what you will wind up doing when you report your taxes at the end of the year or in January or whenever you do your taxes, you will report this as a loss on your investment of the money that you originally put in earlier in the year or a year ago or 2 years ago or whenever you got it. We'll talk about that in a little bit. And you report it as a loss. So what you will do is you will get a tax break from having this loss. Now, the limit on this is $3,000, so you can't really claim any more than that because they don't want, obviously, you don't want somebody who lost $1 million in the stock market to just go sell all the stocks and then the IRS is going to give them $1 million back. They're not going to do that. But there are some caveats to this, and one of them, as I was mentioning before, is the time frame. So if you bought Coinbase this year, it would be considered a short-term loss. If you bought it a couple years ago, which you couldn't have because it wasn't available, but say you had bought it a couple years ago, it would be considered a long-term loss. The same thing goes with profits. You can have short-term profits, which is profits you made off of a stock you bought earlier in this calendar year, and then you sold them within a 12-month window. That would be considered a long-term gain. You can have also long-term losses, which is a stock, like I said, you had it for a long time and then lost out on. So what happens at that case, what a lot of people do is if you have a lot of gains from a stock that you sold during a year, say you made $5,000 off of selling your Tesla stock earlier in the year, well, you can kind of offset that loss because it's taxable income at that point. That's that infamous capital gains tax, the tax on the rich that you hear about all the time. You'll get taxed on that $5,000, but again, if you also have Coinbase and you lost $5,000 in Coinbase and then you sell that before the end of the year, the $5,000 you lost from Coinbase will offset the $5,000 gain you got from Tesla, so you won't be paying the $5,000 taxes on the $5,000 that you got from Tesla. Your tax bill will be zero. Now, a lot of people use this for a lot of different reasons. There's what's something called rebalancing, which is basically when you feel your portfolio has gotten kind of out of whack, you kind of want to rebalance, so you'll sell some shares that you did really well on that are kind of growing maybe too fast for you, and offset it with selling other shares that lost you a lot of money, so again, you don't have to pay that tax bill. Again, some people just use it to basically get rid of the stocks that they had that had major losses during the year so they can get refunded. And what you can do with that money is then you can take that money and reinvest it into similar, not the same, but other stocks, other positions that you want to hold. This is a really important part because, like, for instance, you couldn't sell Coinbase and all your Coinbase shares and then get a refund from the government and then go take that refund and go buy more Coinbase shares again at a lower price. They don't let you do that. What you can do, you have to, there's a 30-day clause in it. You have to wait 30 days before you can buy the same stuff. If you don't do it that way, you could get yourself into trouble. So keep that in mind. Don't use that to sell a stock that's you're losing on and then try to buy right back into the market with the same stock with the money you got from your refund. You want to put it into a different position that you might want to have. Say you want to put it into something like, I don't know, like ACX or something like that, or Lockheed Martin, or you want to put it into, take that money and add it to your index fund. So you can take the money that you lost on Coinbase, get the tax return from it, take that money and then go put it into VTI or VOO or any index fund or ETF that you have. Of course, you have to remember this. I am not a financial advisor. I am not your financial advisor. You should do your own research and due diligence before making any investment decisions and not take advice, as we all say, from some guy you saw on the internet. But again, this is just my suggestion to you guys to go look into this, look into tax loss harvesting, because again, there are a lot of people who've gotten into investing over the last year or two, and they got their Robinhood accounts and they try to get Dogecoin or GameStop and all AMC and all that stuff that happened earlier in the year, and say you're a person who bought into it very high and you sold it very low. Well, what you can do is you're one of those people that got caught up in some of that GameStop stuff and bought it too late. If you sold that position, you can apply tax loss harvesting to that. And if you had a different position, say at the same time, like I said, if you bought Tesla or something that was really, really high this year and kept going up and up and up, then, and you want to cash out on some of it, you can offset again the gains that you got from your Tesla stock with the losses that you had from your GameStop stock. But that is up to you. Again, you guys are going to have to look into that. And if you are a little bit confused about this stuff, you can seek a financial advisor. They will have more information for you, of course. But this is a relatively simple strategy that a lot of people use. But I want to know what you guys have been doing. Let your voice be heard in the comment box below. Have you been using strategies like this to kind of offset your gains over the last year? For some of you old-term investors, what are some things that you would let new investors know about? And if you are a new investor, do you have some big losses? Is this something that you're kind of happy to hear that, oh God, yes, I lost $3,000 on that whole GameStop thing. Oh my God, I'm out of all this money. Well, maybe now you can get some of it back. I want to remind you guys too that you can get started on your investment journey. If you haven't started already, you can still start it. The year's not over yet, by clicking one of the links down in the description box below. There are 2 free stocks to Webull that you can get. Of course, there's a free stock from Robinhood. They're still offering their stuff, but you can check that out in the description box below. Until then, I will see you guys later for more tips, tricks, and strategies in this crazy world of personal finance right here on Wrestling with Finance. Thank you guys for watching and have a good day.